Hello, everyone, and welcome to our webinar titled The Ever-Evolving Landscape of Fintech in Gaming. My guest speaker today is Marius Galdikas, CTO and board member at ConnectPay. Marius is a business and technology executive with more than 15 years of proven track record in developing digital projects and technologies. Proficient at delivering highly scalable and reliable systems and platforms for 24/7 businesses. Well-versed in digital technology, architecture, business and engineering frameworks, as well as organizational development. Marius works at ConnectPay, which is the fastest growing electronic money institution in Lithuania, the leading fintech hub in continental Europe, providing banking services for internet-based companies. By offering smooth onboard and boutique banking experience, ConnectPay has established a strong clientele featuring numerous Tier 1 gambling companies. Strong focus on different legal jurisdictions specifics enables ConnectPay to make compliance work at their clients and not against them. For their clients and not against them. ConnectPay's main activity and focus is banking payment services for businesses and institutional clients. ConnectPay is licensed and regulated by the Bank of Lithuania and is subject to the regulatory framework of the European Central Bank. Marius, welcome, and we're very glad to have you with us today.
Thank you, Jaka. Thanks for having me. Pleasure to be here.
Thank you. My name is Jaka Repanšek. I'm a general member of the International Masters of Gaming Law based in Ljubljana, Slovenia, and also a partner at Hipther Agency, which is organizing today's webinar. Before we continue, I'll give a brief explanation of our topic today, and I would also like to invite you to the chat section of our webinar. You're very welcome to post your questions and comments at any time during my chat with Marius. So, fintechs and incumbent banks can learn a lot from adopting digital growth strategies of the gaming industry. While incumbent banks have struggled in the past with upgrading their businesses to the digital age, plenty of new fintech startups have been popping up and absorbing more and more VC money than ever. Now is the time for incumbent banks to follow suit and to own the next horizontal financial services innovation. That means utilizing brand new technologies and mobile-first solutions, building agile organizational structures, obsessing over serving customer needs, and winning over new, younger customer segments with state-of-the-art banking experiences. The gaming industry has witnessed a lot of disruption over the years. The sector has evolved much more and continues evolving with the introduction of advanced technologies. The gaming industry was estimated worth over 150 billion in 2019. Now the entire of fintech, which has appeared recently, is set to further transform the gaming sector. As online gaming typically requires financial transaction, the role fintech plays becomes significant, ensuring payment processes in a safe and secure manner. The landscape and the involvement of fintech companies in the gaming industry are ever changing. However, the current times push the technologies further, and we have yet to see all these innovations if they are AMLD5 compliant. We'll talk a little bit more about that with Marius as we go along our webinar. Marius, let me start with, of course, a topic we cannot avoid at the times we're living in. What have been the trends of fintech since COVID-19 emergence?
Yes, thank you, Jaka. So, yeah, I think this is a topic that is really unavoidable right now. Everyone is impacted, will continue to be impacted. I think we've been sort of hoping that we went through the first wave and probably the second one is coming, but maybe we didn't even get over the first one. Maybe this is just continuing, and we hear from the news that COVID is still slamming many countries, and people are getting hurt and people are getting locked up and whatnot. So one of the, I think, major trends that really emerged for fintech as a result of COVID-19 is fraud, because fintech, it's an online business, a financial service that works online mainly. And because people are locked up at home, you have basically much more users who might not be so tech savvy and fintech savvy, and so you have a lot of first-time digital finance users in the market, and obviously fraudsters are targeting them. So I think the first one is really fraud.
Mm-hmm. And how are companies like yours, which are well established and reputable institutions, tackling that issue with fraud?
So it's easier for us, right? Because we are a new company, an agile company, rapidly growing, and we started when many of the technologies were already available. So sort of our starting position is really good when it compares to the technology that we can utilize, or the speed at which we can integrate the technology that allows us to control and prevent fraud. So that's basically what we've been focusing on is really data and technology. So what do we know about our customers, and what type of technologies can we utilize and put in place and make work together to mitigate the risk of fraud?
Great. And maybe if we talk a little bit more or additionally about how people changed the behavior and how they use money, not just, of course, in the COVID-19 times, but generally as new generations are using more and more high tech and are also, of course, engaging in various products in the gaming industry. How have people changed the behavior and how they have changed the way they use the money, Marius?
So obviously, the entire world is moving towards a cashless society. The world is moving at different speeds, right? So you have the Nordic countries, doing 95% of all payments in the electronic areas, but you have other countries lagging behind, like for example, United States. They still prefer cash. But one way or another, right, the direction is clear. Now, the drivers, as you mentioned, right, it's a good point. The drivers for driving towards the cashless society are two. Number one, there's a new, tech-savvy generation. They're online, they have devices, they are used to the digital ecosystem, and so on and so forth. It is given for them. So one driver is these new youngsters, that want new, easy, customer-centric services, easy-to-use services, and finance should be, as simple as sending a message on Facebook. And that's why Facebook is also rolling out financial services, because the users are doing that. Facebook, of course, that's not the young generation anymore. Now it's TikTok and other things, which even I'm too old for, probably. So that's one driver, the new generation. I think the second driver is the actual is the actual incumbent banks, right? So the old financial institutions. And why they are driving towards a cashless society is because of optimization. So their business goals is to make money, to optimize costs, to make their organizations leaner, processes more automated, and so on and so forth. So you have incumbent banks also sort of pushing this cashless agenda. But because of different reasons.
Are they successful in doing so? I mean, when you read about the leaders in the fintech industry popping up all around the world, it seems that existing banking institutions are not market leaders at all segments.
Yes, they are not, and there are difficulties. There's inherent problems or obstacles that they have, which is the sheer size of the organization, the rigidity of the organization, the history, the people, the culture within the organizations, and so on and so forth. So, they have been operating under a completely different mindset. And as I mentioned, right, because their strive towards digitization and innovation, towards new services and whatnot, is driven not by not by looking for a new breakthrough offering for the customers, even though that might be sort of their pitch, it's still mainly driven by the cost savings, right? Let's get rid of cash. Cash is expensive. Yeah, they need to, they want to employ less people, less processes. You want to automate things. If you want to automate things, you have to have data, blah, blah, blah. So I think because they are driven by a different driver, that's why they might not be as visible or explosive as other fintechs that immediately, get the young generation together and start with a bang and look for explosive entrance into markets.
Do you see in the near future a trend of incumbent large banking organizations simply buying companies like yours because that's much easier for them to penetrate in the market?
Could be, yes. My previous experience was in one of global players in the financial market. So yes, I think it will definitely be. How successful will they be? Will they buy it and ruin it? Or will they buy it and continue to make it successful? Is yet to be seen. But
well, if we take the experience from whatever Google, Facebook, and Amazon were doing when they were growing up in their tech sectors, in their tech segments, that is exactly what they did. They waited for a fintech, or in this case, it would be a fintech company, to grow, to be successful, to be, worth purchasing, and then the money is obviously not an issue for an incumbent bank. So we could speculate that probably that will be one of the trends in the fintech industry.
Yes, I would speculate this way as well. However, again, it depends on what is being acquired. If an incumbent bank would go after a fintech that has an offering, next to whatever the bank already has, so there's an existing service, and you want, to buy a service that's driven by another technology or another organization altogether, right? So it could be a problem. So I see that as a problem. When banks, so in my opinion, right, if banks attempt to buy fintechs that offer a service that the bank currently does not, so a sort of a complementary service, and would not entangle the fintech with all the regulatory, internal governance, stuff and problems. Then those could be successful. Yes.
One of the reasons that a bank through a century or couple of centuries of its history became large, and you can call it incumbent bank, was because they were strictly following very complex financial and banking regulations. We touched the word regulation a few times, Marius, during our initial chat now. Could we say that one of the reasons that incumbent larger financial institutions are not so successful and innovative yet in the fintech is simply because they have to be more strict in following the regulation? And we mentioned the word fraud, and we're going to mention the word money laundering. Those might be, fields where incumbent banks are still a bit scared to actually penetrate in that market. Could that be one of the reasons we still have this incumbent segment versus the innovative segment?
No, I don't think so. I really don't believe that. I think the rules are the same, right? Whether you're a small fintech or you're a bank, the rules of the game are the same. The only question is, how creative you are about solving them, right? So incumbent banks, have a history of doing things a certain way, right? So a regulation could dictate that you need to ensure something, right? But the assurance of a fact that is, part of regulation that the bank needs to do, everybody used to do it at, let's say, during customer onboarding, when the customer walks into a branch or shows his face and whatnot. Now, with a lot of technology available to us, right? You can build processes or onboarding processes, in this case, as an example, that can utilize a lot of external sources of information at different points in time, and the onboarding process can be prolonged. However, the friction can be reduced for the customer. And so a digital company is a small digital first company, smaller, is better positioned to build these flows that can be built from scratch, that can utilize external, data sources and technology, big data, registries, and so on and so forth. to construct the same compliant experience, but in a much more elegant way. So that's why the rules are the same. How you solve it is different, and the banks are used to solving it at certain points in times, and which could block them from changing the experience for the customer while remaining compliant. So I think remaining compliant is the key here. Like it's the same rules apply to everybody.
Obviously, banks are like huge boats. They tend to turn very slowly and they have a larger momentum. And we touched that issue. But thank you so much for explaining the incumbent versus innovative sort of a, I would say, competition in the fintech market to our audience. And now you mentioned Facebook a few minutes ago. Are the United States leader also in the fintech industry? And if not, which region do you see as the most progressive? You know that we have a global competition between many, or at least 3 or 4 global regions now, also in the tech sector. Just look at 5G, for example. So if it is not United States, which region do you see as the world leader in fintech at the moment and in perspective?
So, obviously, however much I would like to say that we have something in Europe, not yet. So United States, in my opinion, is still the leader in terms of innovation, in technology, and so on and so forth. There are different aspects towards regions, right? So in United States, yes, there's a lot. You have the Silicon Valley. There's a lot of digital-only, digital-first companies, big companies, Alphabet, Facebook, Amazon. They have capabilities, they have the technology, they have the mind power to build new and innovative technologies. They have and build new services, right? Financial services as well. They also have the money to buy the missing components, right? So for example, I know I'm just stipulating, like Amazon, if they wanted to provide financial services in many countries of the world, this is obviously a licensed business, right? So Amazon could go out and look for companies and buy the licenses, the license presence in every single country in the world, right? Or buy an entity just for the sake of compliance, right? So for obtaining a compliance organization and compliance processes and compliance presence in many countries, it immediately opens, a vast market for financial services. So United States has all the sort of ticks to be the leader. I think they are. There is a lot of innovation, as I mentioned, in Scandinavia, right? It's the most cashless society in the world right now. And there is a lot of innovation there. However, just due to the sheer size of those countries and those markets, it is less. They're not sort of growing to be the biggest companies. However, there are still a lot of companies that started in Sweden, grew up and moved to the United States.
One of the good things in digital business in general, digitalization, is that the size of the country and its traditional industries don't really matter very much, or necessarily matter very much, on how this country is moving forward in the digital sector. Just look at Estonia. Estonia is perceived in European Union, at least in Slovenia, I can tell you, as a very innovative and very digital society. And whenever we try to sort of make a comparison between the level of our digitalization, it seems like the benchmark, also because of comparable size between Slovenia, Estonia, Lithuania, Latvia, and similar countries, is Estonia. Now, you're based in Lithuania, another European Union smaller member state. Is that a good hub for a progressive digital company such as yours, or for fintech sector in general? And then I'll ask you something a little bit more about European Union. So is Lithuania, by its regulation, by its size, its flexibility, a good hub for your company? Because there are some fintech companies which are actually thinking of moving outside of European Union, and we'll touch that later.
Mm-hmm. Yeah, so definitely to start your fintech company, to start a business here, build on top of regulation, have the required talent, have the required infrastructure to start doing your payments, Lithuania is definitely in very good position, right? The central bank is very cooperative, right? The central bank has an infrastructure department that can provide the local licensed entities access to the SEPA network. The central bank also, we have programs like the regulatory sandbox. So if you're coming up with wild financial services ideas that are not yet regulated, you can apply for the sandbox and start your business without regulation being in place, like working hand in hand with the regulator. So definitely for very innovative ideas, for fresh starts of a company, this is a very good place to be. On the other hand, of course, as you're growing, and this we have experienced ourselves, right? As you're growing, at a certain point in time, Lithuania, it's still a small country, right? And as you get to certain size as a company, especially establishing, correspondence relationships with other financial institutions or banks, it's still, I don't want to say this, like a little bit backwater when you grow bigger, right? So you definitely need to look in terms of, regionally, how do you become more present elsewhere?
Marius, when we were talking about a pleasant or positive environment for a growth of what your company used to be a startup, of course, it's way over the startup phase now. I didn't only mean the sheer size of the country. I also think about regulation. Now, Lithuania is member of European Union, so is Slovenia, so are many other countries where our listeners are coming from today. Maybe regulation will be one of the reasons why companies such as yours or progressive fintech companies will eventually have to move out of European Union. Just let me give you an example. Deribit, a Netherlands-based crypto derivatives exchange, is planning to relocate to Panama just because of the Anti-Money Laundering Directive 5. Things in European Union tend to be very complex when it comes to regulation. Do you see that as a threat to European Union's, I would say, competitiveness on the global fintech market?
So is this an obstacle for ever faster growth or for untried or risky businesses? Risky from the perspective of, not yet done. Will this work? Can this be broken somehow? Can the industry be damaged by you doing, a business wrongfully, but a very innovative business? Yes, but as I mentioned, yes, it's a hindrance, right? It's an obstacle that you need to overcome. It's additional effort you need to put in. It's additional money in terms of technology, additional people and competences you need to put in place to comply with, ever increasing regulation. However, the example that you're mentioning, right? It could be with Lithuania has a benefit in that sense, right? So if it's something that is not yet regulated, you can go and talk to them. It's how accessible the regulator is to you. But in general, it is an encumbrance. But the same thing is happening all over the world, right? The United States is cracking down on money laundering as well. And, even if you move your operation somewhere else, you still want to provide services in the United States or in the European Union. So one way or another, you have to find ways and means to play in this market, with the ever higher requirement for regulation. And I don't think it cannot be overcome. I think it's just a matter of creativity and the fintechs that have the creative capacity behind them to resolve and address the regulatory requirements, they can grow into very big businesses.
Thank you. Now, Adam has posted a question for you. Is the fintech industry really reshaping the gaming industry in 2020? He thinks this started about 2 years ago. What is your opinion on this? And are there any setbacks for fintech companies when it comes to licensed jurisdictions?
Okay, so this is a couple of questions.
Yes.
So number one, yes. So fintechs, obviously, it's mostly digital first, mobile first services, right? Online services. We, for example, our vision is to serve the underserved internet businesses as a whole, right? So everybody that does a business on the internet, be that sell goods, be that provide gaming services or betting services and whatnot, that is a legitimate internet business, and that is what we tailor towards, right? This business has additional inherent risks, right? Because it's online only. There's a lot of things that you need to put together to ensure where the funds are coming from and whether the gaming provider or gaming service provider has the license, what type of license, where are they allowed to operate, and so on and so forth. So yes, as fintechs, we are really focusing on understanding and knowing our customer, knowing the industry, the gaming industry, and I think we are being ever more successful in understanding this. Now, when it comes to regulation, right, the second part of the question was about...
Yeah, where are the setbacks for fintech companies when it comes to license jurisdictions, to regulation?
So setbacks are the complexity, right? Because as a financial services provider, we have, within European Union, right, you have a license, you passport your license to other countries, which means you need to abide by the law. The European Union, by definition, right, that's free movement of money and people, which we do, right?
But not of gaming services, Mario, sorry.
But yes, exactly. That's what I wanted to say, right? But the gaming services is for some reason different, right? It's not free movement of services anymore, and each country has the right to, or is solving their gaming licensing and gaming questions, giving licensing questions in general on their own. So this is a problem for gaming companies like us, because it is a very complex and very non-centralized and distributed regulatory environment for the gaming industry, which makes our job also very difficult, right? And which makes it makes us provide services. We want to provide services for licensed and legitimate gaming companies, but also makes it very hard for us to know our customer. And just because of the pure complexity of the gaming, right? One country has this, the other country has that. If a payment is going for, I don't know, a gaming company is paying for some kind of marketing services or whatnot, that's a good payment. But now if the gaming company is paying some kind of payout for a winning or whatnot, that's already, should handle that payment differently, even though it's from the same company to the same country and so on and so forth. So yes, it is an encumbrance, and it's very difficult.
What could be the aftermath of I'll touch our first initial question and then we'll move on. What could be the aftermath of the pandemic to digital finance? So
I think the aftermath of the pandemic will be an economic downturn, right? We're not feeling it yet, probably. Some of us people are feeling, but there will be economic downturn, and there will be losses, right? So that is a sort of an extreme situation, very similar, not the same, but very similar to what we had in 2008. And when I look at 2008, right, that that economic downturn and hardship, that actually spiked, for example, that spiked trust issues with financial institutions, and which I think resulted in the blockchain and Bitcoin being developed, right? Another thing is crowdfunding and sharing economy. So there was huge innovation as an aftermath of a crisis, which I think is going to happen now as well. It will be a different type of downturn in terms of economy, but it will result into something. As a result, for example, this is a question between incumbents and fintechs. Could be a question between incumbents and fintechs. Whereas we see a lot of fraud right now, right? So if fintechs fail to control fraud, right, while incumbent banks manage to control fraud, as there's people are staying at home, there's a lot of stimulus programs and a lot of money being poured into the market. Everything is digital because people are at home and so on and so forth. So if fintechs fail to control fraud, people will lose trust in new financial institutions. And as a result of that, they could fall back to, incumbent banks for services because, incumbent bank secures their money. Or it could be something else. So what I'm trying to say is that this will be, there will be innovation, and it will be spiked by this downturn in economy. And I don't know what it's going to be, but hopefully it's going to be something great again: blockchain, crowdfunding, and whatnot.
You mentioned blockchain a few times. Can you elaborate a little bit more about its role in the future of fintech industry?
So I think not only in the fintech, blockchain is a technology that sort of ensures trust, or has trust inherently built into the technology, right? So I saw a term somewhere saying that what ERP systems were for for huge corporations, right? Enterprise planning systems that allow you to control everything within the organization and the trust and whatnot. Blockchain will be the same for cross-organizational communication in general, right? So I think blockchain is the technology that will allow you to avoid intermediaries and be much more efficient in collaborating with across organizations, be that selling services or buying services or whatnot, right? So wherever you have an intermediary that ensures something, when there's a relationship between two organizations, blockchain as a technology ensures that by default. So where exactly will this be utilized? I don't know. In terms of financial sector, I know that banks are experimenting, central banks. Commercial banks as well have their own departments for blockchain, seeing how can they utilize the technology. But I think trying to use blockchain for whatever classical technology is for transactional handling, it's not meant for that. It will never be as efficient as any standard relational system. However, central banks are experimenting with central bank coins, right? So, for example, electronic money, this is us exchanging, issuing electronic money for the funds that we put into the central bank, which is essentially, this is sort of a settlement agreement between the central bank and the financial services provider, which could be done through a blockchain technology as well. And then once you have that relationship, you can extend the network and have more participants in your blockchain that require this additional trust. So,
please go ahead, Marius, if you wanted to finish this. Yes.
No. This just wanted to say, I think it will allow to remove certain intermediaries that provide services that bring no value when there's a relationship between two entities, and blockchain allows you to establish and manage and control that relationship without intermediaries, directly with full trust between each other.
Technology, another question. The rapid growth of the gaming industry is majorly driven by the penetration of mobile gaming devices and the vast availability of internet connectivity. That's a general statement. Innovations in the fintech space, as we mentioned many times, also help improve the sector for players and game developers. How and what is your recommendation to the gaming industry when it comes to mobile gaming devices, maybe introduction of 5G in the next years, and fintech? I know it's a complex question. Maybe if you can elaborate on that.
Oh, that's a very good question. What to do with technology? I think we should definitely move and utilize whatever new technology is becoming available for the services. The new generation are becoming ever more digital savvy, and we should not be afraid of 5G or mobile and whatnot. One thing. Another thing, we should also not be afraid of using those, right? I mean, I understand that there is a challenge when it comes to bleeding edge technologies. There's a challenge of trust as well, right? Or privacy or ethics or security. Because whenever you have a new technology like 5G right now, right, is all this buzz is about, okay, like there's people that are nuts out there saying that it causes COVID. But there's also, other types of trust, like, oh, this is the, Chinese government, and maybe it's trackable or not, and where are the facts, and so on and so forth. I understand there's trust issues always with new technology, but at the same time, we should not be afraid to use it, right? And I think you should definitely innovate and use the new technology that is available. But at the same time, I mean, and I just wanted to probably lean into GDPR, right? So when you have technology, we have more data. People don't know what type of data you have about them and how you use them. So then, GDPR pops up where you say, hey, I got this new technology, I got these new services, mobile devices allows me to, grab your GPS coordinates, allows me to track you across different platforms and so on and so forth. So we should not be afraid of it. We should use it, but properly, right? It's very simple to present the customer upfront what type of data you're gonna collect about them. It's very simple to assure that you don't misuse that data. And as a recommendation, right, when you're talking about whether you should use new technology, yes, do it, but it allows you to sort of access to more information and more data. Just be cautious and only take what is really needed and relative for your business.
GDPR is a game changer in many sectors or segments of digital business. Just on 15th of August, we're launching a so-called Transparency and Consent Framework 2.0, which was launched by the Interactive Advertising Bureau, which means that the largest part of digital marketing industry will have to adapt to the new industrial standards. What is interesting here is that the industry itself is self-regulating those standards within the GDPR framework to be a step or two steps ahead of the so-called information commissioners around the 27 member states. We're probably going to see very similar initiatives also in fintech, and we're already seeing them, because self-regulation is always a better way for industry to actually be one step ahead. So probably maybe just your thoughts on that, and then we'll go to a question by Nicole.
Yeah, I absolutely agree. And it starts with self-regulation and it ends with self-regulation. I think you have to be aware of that, and you don't have to be sloppy. Just simply, take what is needed. Be cautious about it. Be transparent with your customers about what type of data you're using and how you're using it, and everything is going to be very fine. So yeah, self-regulation, I applaud it.
Thank you. Nicola is asking you to say the next question. Do you think that cash will not be the king in 2021? Are land-based betting shops and casinos ready to adapt to the cashless movement? Are the players ready? It's 3 questions, but very connected.
Yes, and it all, drives into the question of cashless society and how it develops across the world. As I mentioned, it develops at various speeds in different countries. Again, Nordics, fully cashless. United States, cash is king. United still going in the right direction, about 10 years behind Nordics. Japan, however however well developed and in terms of robotics and high tech that country is, it's a completely cash society. So I think one way or another we're going towards cashless society. It will happen at different speeds in different countries, so you have to be aware of that, right? There's many different aspects to what drive the cashless society, or issues that do not allow to move towards that direction. But again, it's country by country and moving in that direction, but just different speeds.
And so, to your opinion, land-based betting shops, of course, this is, again, it varies from jurisdiction to jurisdiction, culture to culture. But through your experience, if you take a traditional land-based gaming institution, are they ready, or are they even willing to introduce cashless instruments, or they're sort of wary and still not on the front line of the new movement?
I think they are, and they are willing, and there's a lot of technology. So in terms of the technology, the ATMs and the machines that are present there physically all of them are moving towards cashless, right? And not just cards, but there's also, we see innovation where, maybe there's some wallets and other innovative ways to use the machines. But yes, absolutely. There's no way around it.
We're slowly coming to the conclusion of our panel here in about 5 minutes. And there's another question I wanted to ask you, Marius, and it's a topic we briefly touched a few times. European Union implemented the 5th anti-money laundering directive. I think it had to be implemented, it adopted it, but it had to be implemented in the 27 member states earlier this year. How is this changing the rules of the game in your financial sector, in your services?
So the good thing, right, with the 5th directive is that it's not a complete rework or a new thing, right? It is amendments, changes to the 4th directive. So that's a good thing, number one. Number two, there are very specific reasons why they did it or what this directive is trying to achieve. And those are driven by the incidents, that mainly by incidents that happened, right? So the terrorist attacks, the scandals with Danske Bank and whatnot. So I think it's not challenging, right? I think it's a very natural evolution. Finally, not a complete revamp from scratch, everything changes, but amendments and incremental changes to the regulation, which I think is the correct way of going about it. Now, each country was supposed to implement it by January this year, I think.
Yes.
I know different countries did it and at different levels, and some pieces have been moved to national law, some have not. So there is a little bit of discrepancy there. But in general, I think it's a good thing, and it's not overly complicated.
Marius, it's a directive, it's not a regulation. So as a lawyer, maybe just a brief explanation to those who are listening who are not lawyers. Directives are much more flexible than regulations. Regulations such as GDPR are generally uniformly adopted or effective in all member states, while directives have to be implemented into national laws. Now, as we have learned through history of European Union, some countries tend to be more flexible and more progressive in implementing directives, and some are more strict. Those who tend to be more progressive and flexible in the digital sector tend to be more successful. We can look at Malta when it comes to certain directives, and we can look to Estonia and the Baltic states when it comes to others. Your recommendation, and this is the question we will basically conclude with, is your suggestion as a Fintech sector executive for regulators. It's too late to give suggestions for this directive, but in general, what would you suggest to a regulator or to a national level when it comes to Fintech, when it comes to regulation? Just why I'm asking this question, for example, I mentioned the Netherlands, important Netherlands financial institution moving out of Netherlands to Panama just because of that anti-money laundering directive. We don't want that to spread around European Union. So when it comes to regulators, Marius, your thoughts on that, on a modern jurisdiction for Fintech, for a member state to strive successfully in the future?
So my recommendation is very simple, right? You're regulating, a market of participants, of people trying to do business and whatnot. So it's like you get a directive, right? And then you have your participants, and talk to the people, go out and talk to the people, be more accessible, right? And listen to the feedback from the market in terms of how any given directive can be implemented into a regulation or a law. How exactly can it be worded? What are the costs of translating it into this type of regulation or that type of regulation, right? And do not kill the business just because you did not consult extensively with your market participants. So we've been talking to the central bank, and there's quite a few initiatives that we have as well for changing laws, just changing small details and small things in the regulation, which does not contradict the entire EU regulation or the directives, but makes us or allows us to do business in a much more efficient way, and in a cheaper way, right, while maintaining the same level or standard of compliance. So
Thank
talk
you.
about it.
Thank you so much, Marius, for that thought. Smart regulators should listen to their industry, should talk to them proactively before implementing or adapting laws, not to avoid directives or regulations of the EU, but to implement them in such a smart way that their industry will stay within their jurisdictions and bring new taxes. So, Marius, this is where we conclude. Thank you so much for being with us. It was a great talk. It was great talking to you. I think a virtual applause from around the world is well deserved. Thank you. I wish you a beautiful and not too hot summer. Stay safe and hope to see you in person very soon again or at another web conference. Thank you, Marius.
Thank you, Jaka. Thank you. Bye.
Bye-bye to everyone. Bye-bye.